Welcome to Market Overtime. I'm Nicole Petalides on the floor of the New York Stock Exchange. You know our guest as Mr. Wonderful from ABC's Shark Tank and as the chairman of O'Leary Ventures. I'm pleased to be joined by Kevin O'Leary. Thank you so much for being here. Kevin O'Leary, welcome to the show. Glad you're here.
Thank you so much. Proud to be here.
We have so many things to discuss here, and I've watched a lot of the things you've talked about, and I think the beginning I would like to know about is the 12th sector on the S&P 500 that's coming. You talk so much about DeFi crypto markets and Bitcoin, and what are we looking for going forward?
I think the market's in a very interesting place right now because obviously the forecast for Fed rate cuts just hasn't happened. And in my playbook, I'm not anticipating any cuts this year because inflation remains at a stubborn 3%, slightly above 3%, depending on how you want to calculate it. And the Fed's mandates too. It's that simple. So it's basically 33% too high to cut rates. And so all of the optimists that wanted these 4, 5, 6 rate cuts starting in June, well, that's just not going to happen. So you have to kind of wake up and smell reality. Inflation's a tough one right now, and part of it is because you've got a lot of money being printed by the government through programs like the Inflation Reduction Act, which did nothing except enhance inflation. It's kind of funny the way they name those acts, but it's counterintuitive, that's for sure. And secondly, the Chips and Science Act is pouring billions into the economy. It's all free helicopter money, and that's very inflationary, and it's going to be around for a while, so I don't think it's going to be easy to get inflation down to 2. That's one side of the ledger. And on the other, which is why the market remains so buoyant, if you want to use that word, is that there's a 50-50 chance that policy is going to change in November from a more restrictive policy, more regulated policy that is currently in place with this administration to a less regulated, more pro-business environment should there be a change in administration. And so if you're a fiduciary and you're putting money to work, you're kind of, that there's a 50-50 chance that things get better in sectors like energy, in many sectors where it's heavily regulated. And you're not willing to take money off the table yet till you know the outcome of the election. So it's tied to politics, it's volatile, but nobody can guess who's going to be president next, so it's 50-50.
I wanted to talk about some of the things in the DeFi market. You've talked about stablecoin and what a fast-growing asset that really is, and you actually even talked about regulation and how quickly could we get regulation to actually happen, and then you could have all the U.S. dollars, billions of dollars backing that, and then the U.S. dollar could really be that reserve. This is what you would like to see. What's the timing? How likely is that to happen?
Well, that's a really interesting question, and it has many elements to its answer. So, because I've been following this market for years now, and I've come to the conclusion, as many other investors have, certainly institutional investors, that the only way that crypto is going to work is if it gets integrated into the existing financial services system as a completely and highly regulated asset class. And so let's say you're running a $500 billion sovereign wealth fund, and you have a mandate that says you're only going to put no more than 5% in any one name or 20% in any one sector. You have the mechanisms in place to be compliant. Now, you don't have that built in for crypto yet, so those systems have yet to be built. But let's say you wanted to hold like you do gold, a 3% weighting in gold is not unusual. You have different ways to do that. You can store the bullion and pay for it, or you can use an ETF, like a GLD or whatever, and it's built right into your compliance system. It can be monitored every 8-hour trading cycle or 10-hour trading cycle, whatever you want. So what we need to do with crypto is get regulation in place. And let's say the granddaddy asset of all of it is Bitcoin. We do have the ETFs in place, but the biggest problem right now is the largest exchange in America is at war with its regulator. There's litigation between the SEC and Coinbase. So I can't invest in that because I have to remain compliant. All the crypto cowboys are now gone or in jail. CZ just went to jail last week, the Binance founder and CEO. He's now a felon, so I can't do anything on Binance. I can't. FTX doesn't exist anymore. So I like to invest in the the picks and shovels, the infrastructure of financial services. It's like, could you invest in the New York Stock Exchange 200 years ago? Could you invest in NASDAQ when it was formed? These are great investments. They're great platforms, but they're 100% compliant with their regulators. So the only compliant exchanges on earth I can find right now that I can invest in is WonderFi up in Canada with its 1.6 million users, the biggest in the country, completely compliant with its regulator, the OSC. And the other one, which has just started, backed by Sovereign Wealth, is M2 in Abu Dhabi. So I'm a shareholder of both of those.
Right.
And so, and I think what will happen is all of the money will come off Binance now because it's, you know, a felon. I mean, look, I feel, what can I say? He is what he is. And so he 100% owned by a felon. That's not going to work for financial institutions. And I think we need to get past this crypto cowboy period and move on to a regulated environment.
Before I leave this area, I just want to make sure that our viewers get your experience and advice when it comes to investing in this. You know, you have Bitcoin, you have all these ETFs. You've talked about some of these other things that I just discussed. There's been Ethereum versus Doggy Coin. You've talked about so many different parts of this. What would you tell? And I'm also curious at this point what your allocation is for crypto in your portfolio. I mean, it's my understanding you have, you know, gold and dividend payers and Bitcoin and all that. I mean, what's the allocation now, and what's your advice to investors and in this part of the crypto play?
Well, look, I'm an open book. I'm very transparent about our strategies because I'm totally compliant, and I have to disclose this within our own compliance department. So right now, crypto and derivatives of some of the tokens and coins you talked about, and the ownership of equity positions in the exchanges WonderFi and M2 adds up to about 16.5% of the portfolio. So that's under 20%. That's sort of our hurdle in any asset class. So we're sitting just under the maximum. Gold right now is just under 5% weighting, and Bitcoin itself is just under 2.2%. And so, you know, obviously, one of the biggest positions in the crypto is Bitcoin itself. It's very liquid. It's been one of the best performers for us. But we do, as you suggested, I've got Manic, I've got Polygon, I've got Solana, and many other, you know, H-bars, another one. There's many that we have because I see commercial use for this over time, and they have performed well as any other asset. I also have a lot of watches, for that matter. One of my favorite asset classes. In fact, I'm wearing two of them today. I try and trot out 2 different watches a day.
I love it. I couldn't love it more. I love your watches. I heard about your Snoopy watch to the moon, and you have 2 hands, 2 watches, and how the value, you know, goes up thousands of dollars, and you found that to be a great alternative investment. So I'm going to leave that there. You know, where do you, just quickly, Bitcoin, do you have a target? When people say $100,000 for Bitcoin, do you see that coming?
Well, we've just, you know, if you look at the history of the halvings, we just had it a couple of weeks ago. Bitcoin is always volatile during the initial period after the halving. But I will say one thing, if you're a chartist, just this last week, Bitcoin's 200-day average broke through 50,000, which on a long-term chart, that's very, very positive because it's such a volatile asset. But, you know, I tell people, look, it's a speculation, no different than gold. You don't have to bet the farm on Bitcoin, but I don't see any reason why not to have a 3% weighting in it. And that's my goal. So I'll probably buy some more to top up to 3. So I'm pretty happy with where we sit. Yeah,
understood. I do want to talk about your active plan and how to take over TikTok and have some crowdfunding and do that. But before I get to that, I just want to get some more advice for the investors because we've talked about different ways to invest and your allocation in your portfolio, which includes, you know, commodities, alternative investing, watches and such. But what about just a simple stock pick or the Mag 7 or an index, something a little more simplistic for the folks that may not want to get in and buy H-bars or Solana, SOL, or things like that? How about a simple idea for somebody?
Well, you know, I would argue a simple idea. You know, I've always been an indexer. I like to index sectors, and I've recently sold our own shares company to Alps. They're great partners. We still index with them. And so from the bulk of my equities, U.S. domestic, is always indexed. And so one idea that I have actually executed on is I am in the camp, again, going back to policy, that is a 50-50 chance that we're going to have a less regulated environment come November. And so how do I play that in the portfolio? I play that with U.S. domestic names. And so the companies that benefit the most in deregulation in all 11 sectors of the economy are the ones that are domestic, because they're the ones that are overburdened with regulation now, particularly in consumer markets or in the energy space or whatever. For example, just the regulations on EV and all of this stuff gets changed with an administration change. And I think the way to play that would be the profitable companies within the Russell 2000. Because there's 2,000 companies, more than half of them are not profitable. You don't want to own those, or they're over levered, or they're too speculative in biotech or something. But there are 300-400 good names, and you're going to find them indexed in OUSM. That's an index that I own. I'm not telling people to buy anything, but I own it. And it pays out a distribution every month, and it's a pure play on the U.S. domestic economy in the mid-cap, small-cap space. And so that's my idea for going into the election. And so you hang on for 6 to 9 months and you see what happens. But they'll benefit the most, I think, in an administration change.
Yeah. OUSM, that's the small cap quality dividend ETF. You've also mentioned OUSA, which is in the large cap, also dividend ETF. And this comes from your mother's wise investing platform, where she took a third of her paycheck and was just tucking it away in some dividend payers, and you didn't find out until, I guess, after her passing. And so I think it's exciting that you love those dividend players, and thank you for mentioning those ETFs. OUSA, still a name, still an ETF you like as well, right? Would that be correct?
Yes. It's my largest holding. I just feel warm and fuzzy every month when I get the distribution. I love it. That lets me go buy more watches.
Yeah, I get it. And I want to get to the watches and stuff as well. When we look at the leaders in our, the visionaries, right? I know you worked with Steve Jobs and said how tough he was in the past. Elon Musk is out there telling Buffett today to get into Tesla. Zuck, Jensen, Tim Cook, Lisa Su. If you could have somebody on your team or be working closely with any of these folks, who would you sort of take on board or work with, or who do you think is the best of the best and why?
Well, they all have their merits. I've always, I did work for Steve Jobs. I'm on the record of how difficult that was, but how brilliant he was just as a marketer and a salesman. I respect that. I was in the room with him, watching him do a lot of this for a long time. There's merit in understanding you've got to give a visionary a lot of slack because they're eclectic people. I think the same can be said for Elon Musk, who I have a lot of respect for, given that he executes and he gets stuff done. He gets criticized as well, but his executional skills are measurable, and he has done an incredible job in the endeavors he's pursued. And he has taught many people a very important lesson that I learned a long time ago. You have to be able to distinguish the signal from the noise. And what that means is you can't waste time on irrelevant tasks. And so each day you're going to get a lot of noise coming at you. You have to push it aside and focus on the things you have to execute on. And sometimes people find that rude or they don't like it. And you have to understand you cannot make everybody happy all of the time. And I don't try to do that at all. I try and stay focused on the signal. And if that it's not to your liking, well, I'm sorry, I don't care. I've got to get a job done for my shareholders, my employees, my businesses, and my mission. And so that's what it takes. And if you can't do that, then you will probably fail.
So I have what you're investing in, right? And you have some of these dividend payers. You mentioned Polygon, you mentioned HBAR. Gold is something you like. While you won't give me targets because that doesn't seem to be your thing, you seem to be a bull. I think that would be fair, right? You're a believer in capital markets, free markets here. So I'll go with that. How about like Tesla? You just mentioned Elon Musk. Would you buy Tesla shares? Do you own Tesla?
I own Tesla. I own it in an index already, and I've owned it for a very long time. I mean, I want exposure to the EV market. It's the best company in the EV market. It's got the best strategy for distribution of charging. It's got the best battery technology right now. I mean, there's a lot of things to like about it. It's a very volatile stock, so within a portfolio, you want to probably keep it under a 5% weighting. But if you're going to own anything in EVs, why wouldn't you own the company that makes the most of them? And so always go with number one, and you can add positions with others, but the other companies are even more speculative than Tesla.
Yeah.
So, and I actually use the product. I drive a Tesla as well as other cars. It's not my only car, but I like the technology. I like the vehicle, and I enjoy it.
So when you said you own it in an index, do you also own it separately? Do you own individual stocks, or it's only in the index? Or would you be adding to the position? You said you would not own it, would keep it under 5%, but it would be something you'd be adding to, or just sort of keep it here?
Well, I do own individual stocks, but the majority of my investment strategy is balancing index positions each 90 days.
Right.
And so, I found that to work, because being a stock picker, most people can't beat the index. So you might as well design the index to your liking. For example, I don't like upside down balance sheets, so I don't own a lot of airlines. They're not in my OUSA index because I don't like a lot of debt. I like growth.
Right.
I like free cash flow. So I'm not emotionally tied to any one company. What I really like is a strong business model, consistently of free cash flow, growing those cash flows and distributing some of them back to shareholders. It's very, very boring, and I like boring. And so I like boring, I like cash flow, I like distributions.
Okay.
I like to count the money. And I mean, everybody's got a hot idea with a stock, but when I look at their performance over a 2, 3, 4-year period, most of the time their ass gets kicked by an index.
So I understand. It's you're picking what you think is boring, and that works. And those dividend payers, you get paid out, and it works. Tell me about Shark Tank. You know, you're Mr. Wonderful Tighter, and this goes all the way back to your Dragon's Den days. And some people would say that you're in fact evil. How do you your relationship with the other folks? Do you think you're a little evil or harsh? Do you like playing that role?
You know, I've been doing Shark Tank for 16 years. We're about to go shoot it again in LA in a couple of weeks. I'm very proud of the platform. It's created a whole generation of American entrepreneurs. It's on in 42 countries around the world. I'm the most hated man in Austria and the #1 show in Doha and in the United Arab Emirates. I mean, what's not to like about that? That's fantastic. Now, as far as being mean, I'm the only shark that tells the truth. When your idea has no merit and it's going to go bankrupt, you might as well be told the truth. And that's it. Versus, Barbara on my right and Lori on my left, and they always say, oh, kumbaya, you keep doing what you're doing. But I'm not going to give you any money. I wouldn't take real money and give it to you, because really what they're saying is your idea sucks and I wouldn't give you a dime. And I'm just telling them the truth. Your idea does suck. I'm not going to give you any money, and you're going to go bankrupt. And I think that's the most friendly thing you can do to an entrepreneur, is to tell them the truth. And I'll add one other thing. The only reason Barbara gets the Shark Tank set every year on time is I buy her a new broom.
She'll have to give her rebuttal here. She's a friend of the network. She's been on the show with me as well. I always enjoy her, and Robert too. In the meantime, as we look forward to some of your other investments, you mentioned the watches, and you love that. I also would love to hear, real estate, offices, what kind, you talked about commercial properties. I mean, I saw SL Green recently talking about how well the sort of central Midtown East is doing. But big picture, a quick thought on real estate. I'd love to just fire through a few things.
Yeah, well, real estate is my largest asset class in my entire portfolio. And right now, the space that I'm growing and I'm developing the most in is data centers. These are 5 data centers, which means they're up for AI. They're very expensive facilities, 100 megawatts, 50-acre sites, $3.6 billion costs. And the only states that have power right now that you can actually do these in are Oklahoma, North Dakota, West Virginia, and upstate New York. But nobody invests money in New York right now because it's not a stable policy environment. So we're not doing anything in New York. We pulled out of there, although they have a good energy costs off Niagara Falls, but unfortunately nobody would touch it. They should hire new management in New York. They've got some real problems in terms of how they manage their economy, and I think a lot of people are starting to figure that out. I love the people of New York, and I certainly love New York City, but I wouldn't invest a dime there. So I'm focusing on projects where you can invest, where the policy's stable, where the governors are pro-business, and the courts are normal. They're not crazy. And so those are right now Oklahoma, North Dakota, and West Virginia.
Understood. Tell me about your advice for folks. You at one point you said at one point in life you would say everybody should be an engineer, and then you changed it and you said everybody should go into marketing because that's sort of a great place to be because that's how you sell it. You got to be able to put together something like that. What would you say? Explain that. What should people be?
No, you're right. I said for years that if you're going to pay for an education and put yourself in debt, there's really only three careers: engineering, engineering, and engineering. And if you have some spare time, take some engineering classes. But I've changed my mind on that just looking at my own balance sheet in my operating companies over the last 36 months. The fastest growing investment we're making across every sector we're involved in every case, is content generation for social media. Without that, you don't have a business because that's how you acquire customers. So if you look at all my hires lately, I'm trying to find men and women that know how to shoot content, tell stories, edit content, manage platforms like TikTok, like Instagram, like Facebook, like X, like LinkedIn. These are all different platforms. I have millions of followers on those platforms, and they're expecting content every day. And I want to support my mandates, support my narrative, support my companies. So this is our biggest operating cost and fastest growing. And throw on top of that AI, our new AI lab in Abu Dhabi, where we generate a lot of this content. We're really focusing on the future of content generation in business.
Yeah, you talked about Abu Dhabi, and that brings me to the TikTok story. I know you want to spin that forward. You would love to be able to be a buyer along with the 75 million businesses, right, that are in there. And this way you would do crowdfunding, you said, and get them all involved, all be equal equity, and just move it forward. And then you would have to have the administration sign off. You'd work with them and the Department of Defense for transparency. Is this a real active plan? Or is it just something in your mind? Can this really happen?
No, listen, I've put my hat in the ring with everybody else, but everybody has the same problem. I mean, the only person that matters in this deal right now that has any relevance to it is the Supreme Leader of China. Only he can decide what he's going to do in the TikTok situation. The management of TikTok are irrelevant. They don't have any say in what's going to happen. Mm-hmm. And investors are trying to figure that out in most Chinese companies now. They're beginning to realize, you take Alibaba, for example, where's Jack Ma? He's gone. I mean, it's only the supreme leader that matters in any company in China. And so you have to understand what you're dealing with. Now, the supreme leader can decide not to sell it. And all of the international and domestic investors in ByteDance, as far as their American investment in TikTok, they get a goose egg. They get zero. So you wipe out, let's call it $100 billion worth of value. Now, the supreme leader can do that, but the only problem for him is that the next time he wants to raise capital for any part of the Chinese economy, people are going to say, why should I invest with you? If you have a bad hair day, you just take me to zero. And so his cost of capital is going to go through the roof. And so I think what happens next is the Supreme Leader will start a process, and he'll try and get as much as he can for whatever he's willing to sell. And everybody knows or speculates that he's not going to sell the algorithm that makes TikTok valuable, because no other platform has the algorithm that they have. They're the best at it. So you have a really tough decision. If all you're getting is 170 million name mailing list and a brand called TikTok, that's not worth much. And so I wouldn't pay a lot for that. But if I can get all the content that's been generated, some of the algorithm, I don't know how much or if any, and then it starts to get interesting. But you still have the same problem. You got to rewrite the algorithm from scratch, and you also have to keep the 7 million businesses that are there, that are basically spending the 9, 10, 11 billion a year. You got to keep them on board and engaged, and that's something I can do from a unique perspective. These people are all sharkies, as I call them. They're all in their 20s and 30s. They know who I am. I'm going to invite them to invest beside me. in an equity crowdfunding deal, the largest in American history. And I'll explain to them day by day, here are the challenges, here's what's going to go well, here's what's not going to go well, here's we're going to have to wait 18 months or whatever it's going to take. But you're beside me in the deal. And once we get this thing stabilized, we'll take it public. That would be the hope. And everybody gets liquidity according to what they want. Now, there'll be other bidders, but no one's going to be able to do that the way I can. So I feel my chances are probably better than others in getting this deal done.
Right, understood. And again, over 7 million businesses, 11 billion in revenue, roughly, just to correct that. And also Abu Dhabi, you would go there and you have a lot of great minds there that you would work with as well. I'd love to just get your final thoughts, just quickly on the big picture for folks. Anything I'm leaving out? If you want to talk about your watches, go ahead, but I want this to be great. Tell me something great as your final thoughts. What's my takeaway here today?
Well, my final thoughts is to stay the course on the American economy, because I know it's a very, very divided nation right now, but this too will pass. In terms of being an investor, stay focused. I mean, people say to me, well, we're going to have so much volatility during the election, I think I'll sell all my stocks and bonds. Why would you do that? Why would you do that? You do not know the outcome, and you can't time the market. So stay the course. We'll have some volatility, have lots of diversification in place. A simple rule that's worked for me forever through all the volatility and all market cycles is no more than 5% in any one stock, no more than 20% in any one sector. That always works. And look at the alternatives. Look at the Bitcoins. Look at the stable coins. Look at new things in the world that are becoming important to a new generation. And even in alternative asset classes, I've done very well with my watch collection. It's worth millions of dollars, and it's done better than the S&P. So I'm pretty happy with that too. It's all about what you love, and stay focused and stay the course, and make sure you vote for whoever you want as president. I'm not endorsing one side or the other. I'm telling you, be involved and actually think about what the policies are. At some point, we'll get into some form of a policy debate, which I'm really looking forward to, because I'm tired of all the noise out there. I want to hear each candidate's strategy on border security, on energy, on foreign affairs, and taxation. Give me these metrics so I can make a decision.
Right, understood. As a business owner, I clearly understand that you're looking at the policy and you want to hear from both sides, all sides, keep learning. I mean, look, a lot of folks are getting second passports because, as you've seen it, there's some unrest, people are worried, and a lot of folks getting second passports. You know all about that. Finally, any thoughts? How come you didn't get in on the Dallas Mavericks when Mark Cuban was getting rid of that majority stake? You're not interested in the sports teams, or just don't want to have to work with Mark because he still has a stake in that?
Look, if I'm going to own any kind of a professional sports team, it's going to be an NFL franchise. I watch every game on Sunday. That's what I want. I want to own a piece of a team, so I'll put that on the record. That's what I care about. I love football. From the very first game right to the last game of the day, in my pajamas, on the sofa, all day Sunday, in the basement, nobody bothers me.
Thank you so much for being here, Kevin O'Leary, O'Leary Ventures. Very glad you were with us. Thanks for joining us. That's going to do it for us here on Market Overtime. I'm Nicole Petalides. Be sure you download the Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Thanks for being with us.